Let's move over to drag software and create a new tax return. We are going to work on a Form 1065, which is the business return for a partnership. We'll begin by setting up the client file, entering the basic information step by step. And once we have that in place, we'll proceed to input the financial details and walk through the necessary forms and schedules. Okay, so we'll have a complete and accurate 1065 return ready to go, and then we can proceed ahead. Okay, let's dive in and let's check the Jack software. Let's create the first one. We have a EIN number of the TT partnership. It's a 83. What is that? I don't remember. It's a 8330, 8330, 83700. Okay, it doesn't exit it. Let's create new one. It's a business return partnership 1065. What is the name? TT TT restaurant. TT restaurant LLB. Yeah, sure. Spelling is okay. Yes. Great. So let's give the basic information. Doing business is nothing. Address. It's a 4420 Austin Bluffs Parkway. 80918. 80918. So Colorado Springs. Principal business activity. We have it's a retail. We can check from the last one. So here it is a retail and product services games, but we have the restaurants right now because it is a different return actually. We are doing the return of 2024. Right now it's a restaurant business, so we will add restaurants business code. We don't have it's a business code. We can find it from the Google. Code. Okay, it's Nike's code 722511, full service restaurants. 722511. It's a full service restaurants here. Business, it's the 9th January 2009, 01092019. Accounting method is cash. Okay. So the basic information of the partnership forms we have entered almost everything. Let's come to the partnership details we can add here. Schedule K1. So we have two partners. So 524. Let's add by item wise item detail here. 5496. 52496848. Name Xerox21. Address is same 4420 Austin. Parkway. Generate. Residential state same. We can add it email address here. Date of birth. So the type of partner from the last return, it's a general partner LLC number. And this one, profit sharing 50 percentage, loss 50, and the capital is also 50 percentage. Beginning capital we can add here. What is our beginning capital? We can check it from our work paper. From CapEx, it's a 62288. 62288. Cash contribution can also we can add here from, it's a 35588. 35588. And the current year net income that will come from the income side. Let's move on to the new screen. Anything pending? The basis here, adjusted basis from preceding year, cash contribution, and 622, cash contribution 3588. Okay, is it to the new one? Partner number two, Candace and Scriven, 524511659. 524511659. 1659, Candace and Scriven. Same address here. It's Austin. 8098. Same general, it's a his LLC number. General or LLC number as for the last return. 50 percentage, 50 percentage. Beginning capital 6288. Cash contribution 35588. Bridge. Then basis 62288. Same. Cash contribution 3588. Great. Coming back to the general, let's say the income, gross receipt. Can I get from the TB? Gross receipt is 2628418. 2628418. We do not have any return and allowances, and cost of goods sold is a form 1125A. So we do not have return allowances for the cost of goods sold. Let's complete the form 1125A. Inventory of the beginning of the year. We do have on a LPBC inventory. It's 296866. 296866. Purchase we have to calculate, and inventory at the end of the year is a 315310. 315310. So for the purchase, we'll use the formula of the cost of goods sold. We have already calculated it. I'll show you how we have calculated. This is the formula COGS calculation. Opening inventory plus purchase minus closing inventory. So we have COGS already. We have COGS of 2078459. 2078459. This is the COGS. We have a beginning and the end of inventory we have. So we'll use this formula, opening plus purchase minus closing. We have the ending inventory is 315310. We have opening 296866. 296. So you can check here the total, and it's a 2096903, which is our purchase. The COGS, inventory, and this is beginning inventory, and this is our purchase. So we use the formula of COGS. We have reverse calculated, and we got the purchase 2096903. 2096903. Okay, so this is our cost of goods sold. We'll show you later that cost of goods sold is perfectly calculated. So income part is done here. We do not have anything else in income. Let's move to the deductions. Deductions. What do we have? Let's start with the wages. 291,885. So we have a salaries here. 291,885. Repairs maintenance 684. Rent 175,974. Payroll tax expenses 23351. So payroll tax expenses, payroll. We have a taxes and licenses. So we'll add here payroll tax expenses 3351. And we have other license and fees also. Non-payroll taxes 27855. 27855. And I already have a license and fees. I think we have. I can add license and fees 558. Great. I think I have to add here, or what's next? Then after the non-payroll expenses, we have interest expense 35664. Interest expense 35664. Pension 72971. So we'll have a pension here. When it will be mm, the retirement plans, let's retirement years. Here it is 72971. Then it's a meal 7614, 50%. 7614. Advertising 8293 here. 893. Bank and merchant fees 56994. Bank charges. Contract labor 665, which is the outside service and contractors 665. Yes. Then the minimum small equipment, will add it to the other deduction. The minimum, the minimum small equipment 2029. Next is dues and subscription 5128. Deduction 512851. Insurance 12393. Insurance we laid it 12393. It's a general one. Legal professional 6112. Where legal professional 6112. License we have already covered it. Office expense 1044. Office expenses. Postage shipping 120. It's shipping 120 here. Supply 32866. 3286. Utilities we have 13837. Utilities we have 13837. 13837. What next? Okay, so we are done with the deduction. We have next is the charitable contributions and the fines and penalties. Okay, this is the schedule M1 item, and this is the charitable contributions 12547 and schedule K. I think these are we have done with this deduction part. Coming to here. Hmm. So it's a 12547 charitable contribution 12547 here. And for the fines and penalties, we have a schedule M1 reconciliation of income. We have recorded on books, but it can't be like it is not allowed in tax return. So we add extra other. Okay, it's fines and penalties. What is the amount? 3471, 3471. Great, great. Okay, so we have done the same thing here. We have covered the M1 also, covered the charitable contributions. Now what is pending? So we have pending this schedule P, other information. Yes, yes, okay. So here we have it's a domestic LLC. We have it's a domestic limited liability partnership. Okay. Hmm. Okay. Great. So what is about the schedule B other information? Uh, this section is not about income or expenses. Instead, it focuses on some compliances and the background details of the partnership. So we can see many things here, like information on the partners owning more than 50% of the partnership. We can add these details from the last year return, but most of the cases, in almost there is a, like you can find the no in answers. In every answer, you can find almost no, because there are many things which is not applicable to the general partnership or the return, which is a very basic returns. So sometimes, yeah, always, sometimes it happens that you may find that partners are having more than 50% partners profit ratio, capital ratio. So you can like head here, you can fill this information in schedule B1. And if there is a foreign entity, like the foreign transaction we have, or we have the foreign partners, then we have to fill the details here. And also, if there is any disregarded entities, or we have to add in schedule B1 information. But right now, we do not have that applicability in this return. So we are skipping the schedule B information. What would be the next thing we can check? We have done the income deduction, schedule B. Okay. Assets, liabilities, yes, obviously. How can we miss the balance sheet? So let's fill the balance sheet details from the TB itself. Cash we have a okay, so we need beginning and end both. So we'll use this one. We have 27072 ending 27. What about beginning? It's 345,870. 345,870. Inventories, you can see here 296,866, 315,310. Other current assets. Okay, we have to add other current assets. Now find its other assets. We should have other current assets also. Other assets. Yes, other current assets. So we have security deposits. Yes, we have security deposits, beginning and end. Inventory we have already added 8973, both in beginning and also on end. Do we have any another thing on other current assets? No, we do not have. We have a credit cards, so we have other current liabilities and long-term liabilities. So please page down to additional. We will add other current liabilities here. Here. So what do we have in other current liabilities? We have credit card. Yes. So it was in the beginning it was a 5215 and it says 2456. Then payroll tax payable, payroll tax. Oh, oh yes. Payroll tax payable 618, same at the beginning and the end. Sales tax payable, at the end it was a 31954, 1954. It's a zero at the beginning. What else? We have a long-term liabilities. So page down and we can add a long-term liabilities in this mortgage. Yes, Eagle Ventures. Eagle Ventures 2. Same figures 105 791 791 and William Adler 415511 415511. Great. Anything left? Partners capital will not override here. It will become from the TV or will come from the partnership K, schedule K. Okay, balance sheet reconciliation of income we have done here. I think let's come to the M2 partnership capital analysis of the partnership capital. So we have balance beginning here 125576. We have capital contributed already. We have entered 7116, and we have a net capital loss, which is minus 230696. Great. So we can check the return now. Let's view 1065. Great, many things. So this is the 2628418. Cost of goods sold 2078459. Let's verify it. 2078459, correct one. Gross profit 549. We can check this from the gross profit 549,959. That's the correct one. All the deduction we have 210871. This is our net profit. As for the tax return, let's come to B2T. So 210871. We already entered it 210871 tax return profit, and we have a difference of zero here. So this is the tax profit. And book profit is a 230696 should be equal to M1 line 1. Coming to the last page, M1. Okay, so we have a 230696. That's the correct one. So we are using this the trial software well because we are not filing any return right now. And you can see here the M1 first line is equal to the book profit from the trial balance 230696. 3807, this is for the fines and penalties, and 3471, this is, I think, because of the mills. And this is M2, our balance at the end of the year 34944 of the partnership capital. We can manage it from the CapEx. You can check here 34946, 3494 is rounding off just because of dollar is because of rounding off, but its accurate figure is 34944. Same, this is matched with the, we can check from here, 124 partners capital account. Okay, as for M2, our balance at the end of the year is 34944, which should be matched with our partners capital account, which is 38025. Okay, as per the balance sheet, this should be matched with the M2 balance. Something we have missed. Let's check it again. I think we have missed the current liabilities. Let's see the current liabilities. 971. Great. Let's again check 1065. Last page. 34946. Yes, we got it correct. 34946, 3494. It's because of the round of error. So we have the correct information in our balance sheet. The M2 is correct and verified. 34944 with our CapEx 344946. 223418. This is the income and losses as per the tax profit. 10871. Okay, this analyst of the net income 223418, which is equal to the schedule M1. That's correct. Coming to the schedule K part, ordinary business income 210871. This is the tax profit. This is the charitable contribution. Great. Everything looks sorted. Okay, great. Great. So we have completed our 1065 written here. This was for the educational purpose.